everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, how have the markets been behaving?
Well, we have a US dollar which more or less still has the initiative. As was expected, yesterday we had the market reversal sentiment and the US dollar tended to gain against its counterparts. I would dare to note though that we may see another market sentiment reversal today as we see the US dollar index dropping somewhat. It's also related practically with Nancy Pelosi's trip to Taiwan. There were extensive market worries which tended to drive safe haven inflows for the USD. However, things seem to go rather smoothly. Pelosi actually landed, there were no issues, no harassment. She expressed her support to Taiwan. And market worries tended to ease somewhat after the late Asian session today. On the other hand, though, we may be seeing the Chinese leader Xi getting more pressure for a stronger response. So the whole China-Taiwan story is still an issue, is still a risk factor in our opinion. And should there be further escalation, once again, we may see the US dollar rising. That would be one side of the story. The second would be that US stock markets tended to send some mixed signals yesterday, as there were once again the worries about Nancy Pelosi's trip. Even US stock markets dropped somewhat. I would note though that should the market sentiment improve, we may see US stock markets being on the rise. And definitely I would be noting today's financial releases, actually today's earnings releases, that could drive markets higher.
Would you like to single out some earnings reports for today?
Well, I would be noting eBay. I would be noting Booking, and from the pharmaceuticals, I would be noting Moderna. We have to note though that we have a number of European earnings releases as well, which could create some turbulence in European markets.
What's in the calendar for the day?
Well, we already had in the Asian session New Zealand's employment data. They were for Q2. Now the unemployment rate practically, I wouldn't say so, but remained relatively unchanged. Actually, it ticked up. From 3.2 it went to 3.3. We had an acceleration also of the inflationary pressures within the economy of New Zealand as the labor cost was on the rise. And last but not least though, I would note that the employment change rate tended to drop a little bit, ease somewhat. Overall, the release as such tended to weaken the kiwi. It was characteristic that NZD dropped at around 35 pips upon release. And that may also ease the pressure on RBNZ to tighten its monetary policy at a faster pace. Now the second release which would be of matter would be Switzerland's CPI rates. We had CPI rates which tended to accelerate beyond market expectations. They reached 3.4% year on year. That initially showed no market reaction, no major market reaction on the Swiss franc, but overall could provide support for the Swiss franc. I would also note Turkey's CPI release, which accelerated yet did not reach the market expectations of 80% year on year. It was a tad bit lower, and that could weaken the TRY. For today, I would be highlighting definitely the ISM non-manufacturing PMI figure, that's from the US. We have to note here that the figure is expected to drop, which could be implying practically a slowing of the expansion of economic activity for the services sector in the US, and thus could weaken the US dollar. I would also note for oil traders the EIA weekly crude oil inventories figure. Now there was a substantial drawdown reported last week. This week another one is expected, but it will be, or at least it's expected to be significantly narrowed, just above zero. And still though, we see that the US oil market may remain tight should there be another drawdown and could provide some support for oil prices, especially given the AP weekly crude oil inventories figure, which was released yesterday. And during tomorrow's Asian session, I would be highlighting Australia's trade data. They are for June. Now the trade balance is expected to be another surplus, yet a narrowed one. And if actually so, that would imply that the Australian economy benefited less from its international trading activities and thus could weaken the Aussie.
And what about the monetary front?
On the monetary front, I would make a start with yesterday's statements. We had some statements by Fed officials, among them San Francisco Fed President Daly. Overall, Fed policymakers seem to reaffirm that the Fed remains rather hawkish, and that may have contributed also to USD strengthening. I would dare to note, though, that today we have Haga, we have Kashkari, and I would also note Barkin. Barkin is leaning more towards the hawkish side, while Minneapolis Fed President Kashkari is leaning more to the dovish side. So we may see some diverging messages coming here. Other than that, that should be it.
How about the oil prices?
Well, we had practically WTI remained rather unchanged. Oil traders are turning their attention to the OPEC meeting, ministerial meeting today. Now, should the meeting practically decide that production levels in the coming months are going to be increasing significantly, we may see oil prices dropping, yet the base scenario for now is that OPEC ministers will be sticking to the script. Most probably will be deciding on minimal changes to the upside for production levels, and that could drive oil prices higher. Other than that, I would like to note that we had the AP weekly crude oil inventories figure yesterday, which showed a considerable buildup of US oil inventories, and that could weaken oil prices. Yet, as we have mentioned before, I believe that oil traders will be keeping an eye out for the EIA weekly crude oil inventories figure later today as well.
Is gold still on the rise?
Actually, gold dropped yesterday, and that was reflecting the negative correlation of gold prices to the US dollar. As the US dollar strengthened, gold prices tended to drop. I would dare to note, though, that we had a slight increase of US yields, which could threaten the shiny metals price. And on the other hand, though, gold's price seems to be recovering some ground during today's Asian and early European session. Should the US dollar continue to drop, we may see gold's prices rising further.
Any final comments, Peter?
Well, I would expect that slowly but steadily the market's worries about Pelosi's trip to Taiwan may continue to ease should there be no substantial response from the Chinese side. Other than that, we may see also the earnings reports affecting US stock markets should they exceed market expectations. And given that market worries about Pelosi's trip are going to be easing, then we may see US stock markets being on the rise.
Great. Thank you, Peter, for your time.
Thank you.
And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation today. In front of your screens you have the 4-hour chart of the USD index as usually. We'll make a start with that. Also note the usual warning that all charts will be shown in the 4-hour time frame unless otherwise stated. Now let's make a start with the USD as we have mentioned. Now we see that the US dollar was on the rise yesterday and corrected a little bit lower during today's Asian and European session, yet seems to be finding some support at the 105.90, given that the resistance line has turned to a support line as the price action now is above it. We'll have to correct that first before we move on. Let's do the correction. And let's go hunting for a new resistance line. In the weekly chart, so it's a high point. Okay. Now, given the daily movement, okay, would be placing practically a resistance level 110. Yep. In red, please. Let's readjust. Let's replace and correct labels. A little bit higher. So starting from the support lines, the first support line is being placed at 101.25. Second support line, 103.45. Third support line, first support line now being placed at 105.90 as the price action has broken above it. And the R2 becomes the R1 at 107.20. The R2 is now being placed at 109.10. And the R2 being placed at 111. Round figure. So we see stabilization practically of the USD index. And I would like to see before we move on. We note that the 105.90 has proven its worth once again as a support line. So we're keeping this. But we have to note that the mid-level seems to be occurring here as well. No, there were some touches here, and here. Could be. Anyway, for the time being, it's out. So we may see some stabilization of the US dollar index, technically speaking, given also that the RSI indicator is near the reading of 50. Should the bulls take over, we may see the price action of the US dollar index rising, breaking the 107.20, and start aiming for higher grounds. On the flip side, should the market decide to sell the US dollar, we may see the price action once again dropping, breaking the 105.90, definitely breaking this upward trend line, and starting to aim for the 103.45 support level. Let's have a look at Euro USD. Euro USD, which maintained its sideways motion. See how beautifully practically the pair tested the 1.0275 resistance line. It failed to actually clearly break it. It broke it for a short period, yet quickly dived lower. So the upward motion was interrupted. This trend line doesn't exist anymore. And we tend to maintain a bias for sideways motion for the pair between the 1.0275 and the 1.0110. Please note that the RSI indicator below the 4-hour chart seems to be stabilizing somewhat just below the reading of 50, which could also be implying a rather undecided market. And other than that, we may see the bulls taking over. Should that be the case, we may see the price action rising, breaking the 1.0275. That would be a prerequisite for a bullish outlook. Possibly breaking also the downward trend line and start actively aiming for the 1.0380. On the other hand, should the US dollar be bought, we may see the price action reversing, breaking the 1.0110 support line, and start actively aiming for parity level once again. Let's have a look now at cable. This would be cables for our chart. Now the pair has just, let me correct that. Let's readjust also the label somewhat so it's clear to see what is what. There we go. Now the price action is just at the 1.2185 level. It's actually just below it, just above it right now. So we may be discussing here about a possible breaking of the level. I'll be keeping this as support line for now, but it could be placed very nicely as a resistance line. Note the levels here, here, touches here, 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 and here. So it's a pretty valid level which should be kept under close watch. But should GBP USD actually be able to break above it, I wouldn't be surprised to see the price action start aiming for the 1.2330 resistance line or even breaking above it. An interesting element which has to be noted is the breaking of the upward trend line. And the question is whether it's a break or shift to the left, to the right, sorry, which could also be the case. Even something like this. On the other hand, we have to note that the RSI indicator runs along the reading of 50, which could be enforcing the idea of a sideways motion for the pair. Should the bears take over, we would expect the price action to break the 1.2185, break clearly the upward trend line we have mentioned, and also break the 1.2070. That would be a prerequisite for a bearish outlook. Also, we may see in that case lower peaks and lower troughs being formed. Okay, let's have a look now at USD JPY. USD JPY, which jumped substantially yesterday and is now practically around the level of 133.15. But before we move on, let's make the necessary corrections. Turning the 131.50 resistance line out to support, given that the price action has broken above it. Let's readjust the labels as well. Let's reposition them once again. $136.75, the ultimate resistance line. 134.70. Second support line, the first resistance line, which is currently near the price action, would be the 133.15. 131.50, the first support line. And the second support line being placed at 129.60. Final support line being placed at 128.30. So we tend to maintain a bias for sideways movement of the pair, practically revolving around the 133.15 level. That would not take us by surprise. Next resistance line could be placed somewhere on this peak or on this peak. Yeah. On the other hand, should the bulls actually take over, we may see the price action breaking the 133.15, aim if not even break the 134.70. On the flip side, should the selling interest be expressed by the market, in case, say, for example, the US dollar is being bought, then we may see USD/JPY, should the bearish outlook be expressed, or selling interest be expressed by the market, should the US dollar be sold, then we may see USD/JPY dropping, breaking the 131.50, and start aiming for the 129.60. It's a movement which could be easily done by USD/JPY. It's characteristic that practically yesterday's movement showed us of around 120 pips. Could be done easily. 320 pips could drive it as low as 130.20 or even lower. Moving now to USD CAD. USD CAD, which seems to be stabilizing somewhat. Here we go. And we tend to maintain a bias for a sideways motion of the pair. At the same time, we note that there is a middle level being formed between the R1 and the S1, somewhere here. Let's have a look at it. Yeah, it's a possible mid-level, true, but it was tested a couple of times, but it was also broken multiple times. So I wouldn't exactly bet on that, but it should be mentioned. On the other hand, the stabilization which seems to be taking place seems also to be supported by the RSI indicator below our 4-hour chart, as it runs along the reading of 50. Should the pair remain within that range between the 1.2945 and the 1.2825, we expect the sideways motion to continue. On the other hand, for a bullish outlook, we would require a clear breaking of the 1.2945 and for the pair to start actively aiming for the 1.3075. Should the bears take over, say for example, if the CAD strengthens, we may see USD CAD dropping, breaking the 1.2825 and start actively aiming for the 1.2720. Now, we have to note here that fundamentally the stabilization of USD CAD may also be a result of the stabilization of oil prices. At this point, it would be useful to have a look at WTI. You can see how the pair seems to be stabilizing somewhere about here. And definitely, we note the 92.60 support line. It's even more obvious if we drill out to the daily chart. Note how small the candlesticks are from yesterday and today. Yet it's currently being tested, the S1. Should it be broken, and that's interestingly enough, we may see practically a downward motion following it, and the pair to start aiming for the 87.20. But what I would like to note here is practically this downward trend line. And we see that there is increased bearish pressure here for the pair to drop below the 92.60. We may see the downward motion prevailing, and in which case we may see it breaking the 92.60 and start aiming for the 87.20. At the same time, we note that the RSI indicator is currently at the reading of 40, which may also imply some bearish tendencies. The next 24 hours we know. But I would expect mostly the price action, if it's a bearish movement, to be decisive. On the flip side, should the stabilization be maintained, we may see the price action remaining above the 92.60 support line, probably also breaking the prementioned downward trend line. And that would be also a signal of a trend reversal from bearish to a sideways movement. Should a bullish movement occur, which does not seem to be probable right now, but it's still a possibility and should be mentioned, we would require clear breaking of the prementioned downward trend line, and definitely the price action to aim, if not even breach, the 100.65 resistance level. Anything between 165 and the 92.60 for us still remains a sideways motion, given that the pair had the main body of its price action since around the beginning of July, the 5th. Let's have a look to be more exact. Yep, the 5th of July, within the boundaries of the two levels. Okay, let's have a look now at the other commodity currencies. That would be AUD/USD. AUD/USD, which dropped considerably, yet regained some ground during today's late Asian and European sessions. Let's make the necessary adjustments of the labels. We wouldn't be surprised to see the pair rising just a bit further and stabilizing somewhat, probably between the 0.6915 support line and the 0.6980 resistance line. That would be in this area here. It's characteristic that the RSI indicator is still rising, aiming for the reading of 50. So we see that the bears are losing still some ground, but it doesn't show to have this decisive bullish sentiment on behalf of the market. So we may see the stabilization actually being predominant. Let's have a look now at the Kiwi and the DUSD. And the DUSD which dropped. It was characteristic how the pair dropped. Let me first of all correct it and replace the data labels in the positions so we have a clear reading. And we have the S1, the S2, the S3. Now, like the Aussie, the Kiwi is also recovering some of the lost ground of yesterday, Note the wide drop here. That's over the past 2 days. If I'm correct, let's have a look. Yeah, since the 1st of August. And it's now during the Asian session and early European session recovering some ground. It would be interesting to see what the market reaction was on the release of the employment data of New Zealand for Q2. That was yesterday, actually today during the Asian session. Let's drill down to the minute chart. Now we are in the 1 minute chart. Let's open it more. Let's see how the market reaction was at the time of the release. It was at the quarter to 2 o'clock. Here you go. Note that the pair dropped upon the release. And we're measuring all the movement downwards from here and the following 3 minutes up until here. A 33, 35 peep drop. Let me make it more clear. It's quite characteristic. Okay, let's drill back out to the 4-hour chart where we were. We're adjusting the levels. So what's next? How is NZD-USD about to behave? We tend to see the case for a possible stabilization of the pair between the 0.6290 and the 0.62. It's characteristic that the RSI indicator has a slight upward slope and is quite near the reading of 50. It's actually at 46. So we may see the market being a little bit undecisive here. Should the market, though, decide to buy the US dollar, we may see the price action dropping, breaking the 0.62 support line, and start actively aiming for the 0.6095 support line, which provided support practically around the 8th to the 13th of July. On the other hand, should the US dollar be sold, we may see NZD-USD being on the rise, breaking the 0.6290 resistance line, and starting to aim for 0.6390. Note the mid-level at 0.6350. It has halted the upward motion of the pair. That was, if I'm correct, on the 29th of July. Let's have a look. On the 1st of August, Monday. And it did that again on the 20th of June. So that's an important mid-level to keep an eye out. Other than that, we may see also this as a stabilization point as well. On the other hand, should the bears take over, say for example, if the Kiwi strengthens or the US dollar weakens if you prefer, if the Kiwi weakens or the US dollar strengthens if you prefer, we may see the price action reversing direction, breaking the 0.62 support line, which provided support once on the 27th of July, twice on the 21st of July, and resistance as well on the 18th of July and the 8th of July, support once again on the 4th and on the 30th of June. So 0.62 should not be taken lightly. It's an important level. And if that's the case, we may see the price action starting to aim for 0.695, which, as we have mentioned before, was a key support line from around the 11th of July up until the 14th of July. Let's have a look now also at Safe Haven CHF, which yesterday had a downward motion. Yep, that has been broken. Oh yeah, definitely. And not only does it, the price action has broken the pre-mentioned downward trend line, It has also broken the 0.9550 and actually found some support on 0.9550, a signal that practically the price action seems to be stabilizing above it. Now, whether that's going to be followed by a continuation of the upward movement remains to be seen, but let's make the necessary corrections and see how high it could go. One level could be here. Second level would be here. I know it's a little bit wide. But I'm holding the 0.9860 resistance line due to the double touch here and here. That would be on the 12th of July and the 14th of July. Nevertheless, it's far wider than the space between the other resistance and support lines. Let's make the corrections also in the labels. Final support line being placed at 0.9375, the second support line being placed at 0.9455, third support line being placed at 0.9550, let's replace also the resistance levels. 0.9640 is now being placed as the first possible resistance stop. Second resistance level is being placed at 0.9730. And the final resistance line is being placed at the 0.9860. 100 pips apart, 130 pips apart. Symmetry is not exactly my goal. There we go. If we drill down to the 1 hour chart, note the correction lower. And note how the 0.9550 provided support here. Once, twice. It's quite valid now. Okay, drilling back out to the 4 hour chart. Are we expecting a continuation of the upward movement? Yes, that could be a scenario. And the main reason why we could be seeing that, or at least will be correcting a little bit higher, or at least continuing its upward movement, would be noted because we have the RSI indicator, which is above the reading of 50 and seems to be maintaining that level, implying a rather, I wouldn't say bullish, but still there are some bullish tendencies. Now, you're asking whether the USD CHF will have a vulnerable R2, that would be the 0.9730. Let's have a look at that. The 0.9730 resistance level found price action around the 20th of July up until the 21st. So it was tested a couple of times. And I would be also adding the touch here on the 6th of July. Let's go further back. Yep, it was also tested here. And there's a support line here and here. I would be keeping it. It could be discussed. It could be discussed. Actually, how high the R2 could be placed, yes, that would be something which could be discussed. But in my opinion, seems to be valid. Anyway, should the bulls maintain control, we may see the price action breaking above the 0.9640 and start actively aiming for the 0.9730. Could there be a mid-level? Possibly, yes. Note the peaks here, here, here. There could be a mid-level here in the middle. On the other hand, should the stabilization be present for USD CHF, I wouldn't be surprised to see it rising a little bit higher, aiming for 0.9640 before stabilizing between the 0.9550 and the 0.9640. On the flip side, should the bears take over, we would expect the price action to break the 0.9550 and start actively aiming for 0.9455. Let's have a look now at gold's price. Actually, before moving to gold, I would like to see what the market reaction was on USD/TRY, little if any, for the release of the Turkish inflation data. Let's drill down to the 1 minute chart. If there was any. Actually, there was some. Let's have a look. Yep, there it is. That was around 12 o'clock. No, the release was at 10. No market movement. Okay. There was some strengthening of the TRY around noon Cyprus time, but the pair corrected higher once again. So it's there. Little if any volatility practically for USD/TRY. But there is still an upward motion, even slight one. Okay. Let's have a look now at gold. Gold's price, which yesterday corrected lower, actually dropped and at some point even broke clearly the 1763, yet corrected higher later in the American session and during today's European session. And that's leading us to keep our resistance and support lines intact. Maybe we could lower just a bit the S1. Somewhere here. Oh, too low. Nope, we're keeping it. At 1763. Now, should stabilization given the pair's slight upward movement during today's Asian and European session be maintained, we wouldn't be surprised to see it between the 1790 and the 1763 levels. The important element maybe of yesterday's movement would be the breaking of the upward trend line, which also tends to imply some stabilization. Also, the RSI indicator below the 4-hour chart, which has practically bounced to the reading of 50, yet is aiming for it once again as it's being drawn towards the 50 level. So a stabilization could occur. That would be our base scenario for now. On the other hand, should the bulls regain control, so for example, if the US dollar finds considerable number of bids in its path, we may see the price action breaking the 1790, which used to be a support line, and start actively aiming for the 1813. It's a little bit too optimistic, I understand it, but still I would require clear breaking of the 1790 resistance line for a bullish scenario. And the main reason why would be that I would like to see the next peak being higher than the last one. So it has to be somewhere around the 1790 area for a bullish scenario to dominate the pair's movement. On the other hand, should the bears take over, then we would expect the price action to drop, definitely break the 1763 support line, and start aiming for the 1740 support level, which used to be a resistance line in here, but now turned to a support line given that the price action has moved above it. And I would note that we would expect a bearish outlook, or would adopt a bearish outlook for the pair should it only break the 1763 and start actively aiming for 1740. The main reason why is because we would like to see it dropping below this true here. It has to mark lower trues. Anything else could be a stabilization. Okay, let's have a look now at stock markets. There is one which you requested, which we have not seen for a while now. That would be Japan's JP 225, the cash. And it's a sideways motion. Let's drill down to the 4-hour chart, it becomes more obvious. Note that these support and resistance lines were drawn a month ago, and they're still valid today, despite the upward and downward movement in the midtime. And it would be characteristic to see that in the daily chart. Practically, they were drawn somewhere here. No, sorry. Somewhere here around June. Nevertheless, for the time being, we tend to maintain a bias for a sideways motion. Interestingly enough, Japanese stocks did not seem to be affected by Pelosi's trip to Taiwan. I expected to see a drop there. It did not happen. We have to note that. On the contrary, the index maintained a sideways motion, and that would be between the 27,515 and the 28,050. I wouldn't be surprised to see the sideways motion be maintained as long as either the S1 or the R1 remain intact. They may be tested but not clearly be broken. Should the S1 be clearly broken, that would be a signal for a bearish outlook. That would draw my attention immediately, and we may see in such a case the index dropping, breaking definitely the 27,515, we have mentioned that, and start aiming for 27,130. On the other hand, should there be a high degree of optimism and Japanese stocks be on the rise, we may see them breaking the 28,050. That would be a prerequisite for a bullish outlook, given that the index has tested it repeatedly over the past few days, and start aiming for the 28,630. Okay, by the way, we could widen this a little bit higher. See how the price action created the new resistance line here and here. And that would be the 27,235. The label as well. Okay, let's move now to DAX 40 for Germany. DAX 40, which seems to be in a sideways motion between the 13,360 support line now, we have to correct that, and the 13,620 resistance line. I would expect the earnings report of today from German companies to create some increased volatility, but they didn't. And let's go hunting for a new resistance line. Now this could be wide. We have a touch, some correction here. I'm keeping this one. And that would be the 14,250 resistance level. Let's readjust the chart and the labels. quite happy with the support and the resistance lines here. And I'm quite happy that the price action proved them right once again. 12,615, 12,925, 13,360 being the first support line. 13,620, 13,870, and the final resistance line being placed at 14,250. It's something which is pretty wide, I know, but still in my opinion is valid given the peaks we have shown before. The next one would be somewhere here. For the time being, we tend to maintain a bias for sideways motion given that the 13,360 support line was respected by the price action. That was yesterday. Should the bears take over, we may see the price action reversing direction, breaking the 13,360 support line, which would be the first signal for a trend reversal, and start aiming for the 12,925 support level. Now there is a catch here. The catch is that this support level could be higher somewhere here. And the main reason is that we have a touch in the sideways motion, also some touches to the upside. I will be keeping this one. And that would be the 13,035. Okay. Let's move now to US stock markets, which will be opening in a couple of hours. And just a quick look. We see the stabilization. The stabilization is evident. So I would expect practically, note how the Dow Jones has dropped a bit. US 500 is stabilizing. US 100, the Nasdaq is also stabilizing just below 13,000. So it's like the market maintains a wait and see position. And I wouldn't be surprised to see fundamentals actually driving them. For the time being, for Nasdaq, we tend to maintain a bias for sideways movement. Yet should the bulls take over, given also that the RSI indicator is clearly above the reading of 50, it's actually aiming for the reading of 70. We may see some bullish tendencies, in which case we may see the index breaking the 13,000 resistance line and aiming for 13,550. On the other hand, we have a similar picture, but not that clear in the other two indexes, with Dow Jones showing some stabilization after a drop, and the RSI indicator is at the reading of 50, implying once again some stabilization here. So that should be it from our side. From all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily and today we will look at candlesticks. You may have seen candlesticks on a chart, but if you don't know how to use them yet, Here is some useful information to help you get started. In financial technical analysis, a candlestick pattern is the price movement shown graphically on a candlestick chart for a specific period of time. Candlestick charts are used by traders to predict the future price movement based on past patterns. The recognition of the pattern is subjective, and there are programs for charting based on predefined rules to match the pattern. There are 42 recognized patterns. Some of them are simple and others more complex patterns. Something that most people don't know is how old candlestick charts are. They originated in Japan in the 1700s when a Japanese man named Homa discovered that. Despite the connection between the price of rice and its supply and demand, the markets were more influenced by the emotions of traders. Trading is often influenced by emotion, which can be read in candlestick charts. Candlesticks show this emotion in color. The different price movements are shown in different colors. Traders use the candlesticks to help them decide whether to trade by analyzing repeated patterns that can help determine the short-term direction of an instrument's price. Candlesticks are ideal for short-term traders as they can help them decide when to enter or exit a trade. Candlesticks are basically formed by the opening, high, low, and closing prices of a financial instrument. The main body of the candlestick is called the real body. The real body represents the price range between the open and close of that trading day. If the opening price is above the closing price, then the candlestick that is formed is filled and is usually red or black. If the closing price is higher than the opening price, the real body of the candlestick will be green or empty. In other words, the candlestick will appear white with a black outline. Traders can change the colors in their trading platform. For example, a down candle is often red instead of black, and up candles are often green instead of white. The lines above and below are known as shadows, tails, or wicks and represent the high and low price ranges within specified time period. However, not all candlesticks have shadows. In the next video, we will look at candlestick patterns in more detail. Stay tuned. Thank you so much for watching. Bye-bye.
Shares represent equity ownership in a company or financial asset. Trading in shares provide access to the stock market of some of the largest and most popular companies, such as Google, Amazon, and Apple. You can invest in shares online with CFDs and gain full exposure with a small initial deposit. CFDs allow you to speculate on price movements without physically owning an underlying asset, and you can trade both rising and falling markets. With the growing popularity of CFDs, an increasing number of traders prefer trading shares through CFDs instead of via traditional shares. This is due to advantages offered by CFDs, such as leverage and the ability to go long and or short. In addition, fractional trading makes it easier to diversify your portfolio while investing in multiple companies for a fraction of the share. With share CFDs, you can boost your buying power by trading with leverage. CFDs are leverage products, which means you can control a large contract value with a small deposit, known as margin Essentially, you only need to deposit a small portion of the total trade value to gain full exposure to the markets. CFDs provide potential to profit in both rising and falling markets. Basically, traders who trade CFDs are speculating on price movement by taking short or long positions to profit on the asset's price going down or up, respectively. You don't actually buy or take physical possession of the shares, and you can still make a profit when the price of the share falls in value, not just when it rises. Share CFDs allow you to invest in shares from several markets around the world, as well as in other instruments. This is known as diversification.
Let's begin today's session. Okay. First and foremost, of course, disclaimer, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? Now I see Natalia has tuned in too. Nice to see you here, Natalia. I thought I'll be seeing you in the VIP room. I didn't see a registration come through. I was looking out for you all week, man. Right. But all right, let's continue in today's session. For those of you all who are here for the first time or wondering who am I, right? My name is Desmond Leong. I run the award-winning research firm, Everest Fortune Group, and also the Forex Army, right? Where is my marker? I have a little marker over here. Yeah, so we are finalists for 2019, 2020, and 2021 for Best FX Research, and 2020 and 2021 for Best Equity Research, right? Really strong team of traders, right? And we usually work with the institutions on telling them where the markets are heading, but we have a special partnership with IronFX, where we're bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to a next level. Right, yeah, Natalia, waiting for you, man. Let me know if you're in difficulties joining the VIP room, all right? I'll give you guys a link to get access to it later, okay? Now, if there's anything I want to encourage you guys is that, yeah, you know, I'm a very young guy, 32 years of age, right? And if there's any word of encouragement I want to share with you is that you don't need 30 years in business, right, to be a good trader. You don't need 30 years in Bloomberg to be a good trader. You just need 30 days learning the right stuff. And here at IronFX, we're going to teach you the right stuff on how to be a better trader, okay? But of course, whenever you have questions, please send them through so I can answer them. Otherwise, you know, it's going to be lonely if it's just me talking to myself. All right, guys? So yeah, please, anytime you got questions, just send them through. Now, let's begin today's session, right? I'm going to touch on trend lines, right? The ways we can use trend lines. Then we look at channels. So channels are, you know, trend lines are, are up and down. Channels are essentially parallel trend lines, right? There's a proper way to use it. I'll touch on how you can use this to improve the probability of your setups. And I'll be showing you some live examples on some of the calls we did that turned out really well, right? And it's actually a way to apply this form of technical analysis into trading, right? If you apply it properly, trust me, it can be one of the best and most profitable kind of trading strategies you encounter. Okay, now let's move on from here. So just remember, when it's a recap on our last week's session, always look out for significant swings. All right, it's very effective when you're doing trend lines. It's very effective when you're doing channels, right? If you draw a trend line like that, you know, you look at the significant swings. You look at the significant swings. Okay, we usually don't try to use the smaller insignificant swings over here. Yep, so these are the insignificant swings. They're not that useful when you plot like little channels here and stuff, right? You're looking for the bigger levels to plot your trend lines. Okay, so always keep that in mind. Now, Now, okay, these are significant multiple swings. All right, so this is really quickly what one of the key things I'll be showing you later, right? We did touch last week on the multiple swing highs, right? Multiple swing highs. When you combine them together, you can find a very nice level of resistance or support. I'll be showing you how you can use this in your trading this week. All right, pretty interesting stuff. Pretty interesting stuff. Okay, now let's first look at trend lines. Let's first look at trend lines. Remember, guys, again, I encourage you guys that if you have any questions at any time, please send them right through. I'll do my best. I literally have another screen open here to answer you guys. Okay, now trend lines, right? So one of the questions that we've always wondered, right, is when you use a trend line, do you use the week or do you not use the week? Right, so this uses the week. Some people prefer not to use the week. Okay, now I'm going to give you guys the answer here is that when you're drawing trend lines, one of the best things to do is to use the week, right? So you notice that when you change the trend, when you change the time frame, like for example, if this is the H4 time frame and you change it to H1, oh yeah, so Techno is asking where people can access my clips on me teaching. That's a good question. I realized I forgot to cover that with you guys, right? I'm gonna show it to you over here. For the upcoming webinars, right? For the upcoming webinars, there's a past webinars and the upcoming webinars. All right. So past webinars is over here. Upcoming webinars is over here on the main IronFX website. Okay. So past webinars, that's me. That's Cass. You might have seen her, right? So this is the if you want, you filter based on English, and you can see all the different past webinars here. It's really, really nice. And you can kind of see what we had taught for the session. You click watch webinar. And there you go, right? It's over here, right? It's a great session.
Consistent.
This was Cassandra.
If you are crossing the.
I kind of thought usually there's usually a recording of self somewhere. Yep, there we go. Okay, so that's where the past webinars are. And of course, if you want to watch, please do sign up for upcoming webinars, right? The upcoming webinars we have our upcoming webinars. It usually takes a while to load over here. Right, you can click on English, right? And after our session this week, we're gonna have our top price action setups next week. All right. Yes, you can access it on YouTube, right? So this is actually the YouTube playlist, right? And we are gonna click on this button called here. This is the link. This is the link that you want to go to. This is the playlist on YouTube. Okay, so yeah, you can come in here and you can watch the webinars over here. Okay, pretty good stuff. I think it's you just need to watch each and every one, right? So like last week's session, some pullbacks, overlaps, and swings. You can check it out over here, right? So anytime I'm referring to my previous webinar, you can check it out over here. Okay, guys, I hope that answers your question on where you can find it. Okay, now let's go back to today's session. All right, let's go back to today's session. Okay, so like for example over here, H4, right? When I change it to H1, right? For example, if I change it to H1, you notice that there is all the different bounces that happen over here. It is the same bounces that happen over here, right? And that is because we take the wick, right? If you don't take the wick, in this example, right? This is when we do not take the wick. That's where it becomes very, it doesn't look that nice when we draw it, right? So on the H4, it might look nice, right? We're not taking the wick on the H4, right? You can see that we ignore the wicks over here, we ignore the wick over here, ignore the wick over here. But what happens on the H1 chart is that if you change the time frame, you notice that it becomes like this, it just cuts right through and it doesn't look very nice, right? So that is the reason that when we are drawing, when we're doing technical analysis, when we're drawing trend lines, always include the wick, right? Because when you include the wick, no matter whether you're on the H4, you're on the H1, you're on the M5, you're on the M15, right? All of it will give you the same reading, right? But if you use no wick, right? No wick, you will get stuff like this where you have absolutely terrible example. Let me show you an example. Let me try to show you an example over here. Okay, I'm just going to load my chart. See, Let's see if I have an example somewhere that we can look at. One where there's a very big wick or something. Let me just check it out. Okay, let me show you the difference, right? So on the H4, you look at this. Let's ignore that wick over there. Let me find a wick. Okay. Now for this example, for example, right? So imagine if we drew like this line, and we catch this wick over here. Okay. Look at this wick over here. We caught it over here. When I change to the H1, to the M30, oh man, I need to scroll back and forth. It's quite messy. Give me a second. I just drew it, but I can't find it. I'm going to do a bar replay. I'm going to show you exactly what I mean. Okay. Now look at this. It catches it perfectly. If I change it to the H1, it catches it perfectly, right? If I change it to the 1 day, it catches it perfectly at the bottom, right? If I change it to the 15-minute chart, oh, there's no data here, right? 30-minute chart. Is it 1 hour chart? Oh, because there's no data points there. Did I change my price feed or something? Just give me a second. Just give me a second. I think they, what I want to show you is that if you take an example, you catch the lows over here. On the H4 chart, it looks nice, right? You're catching the closing price, you ignore the wicks. But if you change the time frame, like let's change it to H1, you can see that suddenly this doesn't look very nice, right? No one would draw a line this way and cut it like that, right? So on the H1 chart, it looks terrible, but on the H4 chart, it looks okay, right? That's why you need to always take the wick, because when you take the wick in examples like this, right? Whether you're on the H4 chart, whether you are on the whether you're on the 1 day chart, whether you're on the 1 hour chart, right, let's go back to the 1 hour chart. You can see it over here. Whether you're on the 1 hour chart, it all catches the low perfectly, right? That is why you need to use the wick when you're drawing trend lines. Okay. Now, the next thing that I want to do, right? You notice that this tends to look slightly better. This tends to look slightly better than this. The only difference is the time frame that is being used. Okay, this is the H4 time frame. This is the H1 time frame. So sometimes if something doesn't look that clear on the H1 time frame, right, you're starting to see, you're looking at too granular data over here, right? There's nothing wrong with changing it to the H4 time frame or going one time frame larger so that you see the bigger picture, right? You notice this one, you're seeing a lot of granular data in between, which is not that effective, right? It's telling you the same thing. This and this, they are the exact same thing. Okay, just that this one uses a higher time frame and it filters out a little bit more of the noise. Okay, so this is a little trick that you can use when you're analyzing charts too. Okay, now this trend line, right? How many people want to take a guess? Is this trend line okay or is it not okay? This ascending support trend line, is it yay or is it nay? Is it correct or is it wrong? Okay, I see a couple of answers, right? Some saying is correct. Okay, let me share with you the answer here. Okay, Techno is also saying it's correct. It's wrong. Why is it wrong? Okay, because a trend line, a trend line support should not be decreasing. Okay, imagine you're a man, right? And you have a slope, and you're walking up a slope. It's very easy to walk up a slope, right? There is very clear support over there. But if you are a man and there is a slope down, you notice it's very hard to find support. You just keep going, and then you're walking down. If the slope is very steep, you end up just maybe tumbling down, right? Because it's very hard to find support when the slope is steep, right? As in it's sloping downwards. It's very easy to find support when the slope is upwards. You can easily go up. But when it's sloping downwards, it's a slippery slope. Very hard to find support. That's why in such a situation, right? Whenever you see a trend line that is sliding downwards, right? Stay out of it. It's very hard to catch a bounce when it's sliding down, right? Because you think about it, the overall momentum is bearish, right? If you look at that, price is making lower high, lower high, lower high, lower. It's going lower and lower. As it is going lower, you already have the bearish momentum pushing it down, right? You already have bearish momentum pushing it down. And when you're trying to buy over here, trying to buy to go up, because you have bearish momentum pushing it down, it gives you a much lower success rate, right? Your hit rate usually is greatly affected, right? You have a much lower success rate of catching the moves correctly, okay? So that is an important consideration when it comes to drawing. That's an important consideration when you're drawing trend lines. A supporting trend line should only trend line from the bottom, right? So if you have a trend line, it should only be from the bottom. That is what you're looking to catch. Bounce, 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 bounce. Because you have the overall trend going up, it's easier and more effective to catch the bounces when your trend line is going upwards. Now, the same thing is true when you have a downtrend, right? You have a bearish trend line going downwards. That's where, as you can see, it's going downwards over here. That's where, it's easier when you have a descending trend line. So look at this case, we have a descending trend line. We have a descending trend line, but it is at the bottom of price, which is wrong. If the descending trend line is at the top, then it works. But if it's at the bottom of price, it does not work, okay? So same thing here, it's descending trend line, dropping. Very nice, right? That is okay if it's on the top, right? So you're always looking for a trend line from the top if it's descending. Okay, important considerations to take note of, right? 2 trend lines is tentative. 3 trend lines is a valid trend line. So you got 1 trend, 1, 2, 3 touches. 3 touches becomes a valid trend line. Okay, so you can see how you have 1, 2, 3 becomes a confirmed trend line. 4 is where the nice little reaction happens. 2 is always called tentative because there are too many occurrences of trend lines having 2 touches. What do I mean by that? Right. So I just come here. If I were to use a trend line 2 touch every single time, right, there'll be too many of them, right? You can draw 1, 2. Okay, this is 3 touches. It's not bad, right? And you can see how there is like 1 touch here, 2 touch, 3 touch, 4th small little reversal over here, right? But if you use 2 touches, you can literally draw almost every single thing. Here to here is 2 touch, right? Here to here is 2 touch. Here to here is 2 touch, right? And it becomes a lot less effective, right? Here to here is 2 touch, right? So what you want to do is to minimally have 3 touches, right? Then you have this thing called a valid trend line. So at the 3rd touch, it becomes valid, right? Then you look to trade from the 4th touch. 2 touches is just too common, right? You can just literally take any 2 points and combine it together, becomes a trend line. And when it's too common, it's usually not that effective. Okay, guys? Now, moving on to the next topic, right? Which time frame should you use trend lines on? Well, the answer to this question is that you usually use it on the higher time frame, right? So the higher time frames usually on the H1, on the H4, they do slightly better. Even on the D1, the 1 day charts, they work slightly better. On the smaller time frames, they don't work that well. Okay, on the smaller time frames, they don't work that well. So that is just the truth when it comes to using trend lines, or actually any form of technical analysis. All right, guys. Let's move on from here. There are a few things that I want to show you on how you can improve your setup. Okay, so when you're drawing trend lines, for example, the first thing you do is you load up the Ichimoku cloud. To load up the Ichimoku cloud, right? Usually when you load Ichimoku, right? I'm going to show it to you here. Usually you have all this, okay? You have all these things, which is very, very messy. What you want to do is to edit it, and you want to remove everything and just leave the cloud. Just leave the cloud. The cloud will give you a good enough gauge on the momentum of the market. Okay, the cloud itself is a good enough gauge on the momentum of the market. So in this case, we just draw a nice little cloud here. Notice that the cloud prices tend to respect the cloud quite nicely. Okay. Now, after you use the Ichimoku cloud, then you add in a trend line, right? So we got a nice little trend line over here. Not only do we have a nice trend line, we also have a nice 38% Fibonacci retracement from here down to here. Not only do we have that, we notice that each time price reverse, it was close to a 99%, right? Reverse once, reverse twice, the reversal happened on the 99%. So we got 4 reasons, we got trend line, we got cloud, we got 38%, we got stochastic, all of it leading to a very nice example of price dropping very nicely. Okay, so that is the important, that's one of the tricks when it comes to technical analysis, right? You don't want to be using just one single trend line to trade. You want to combine it with multiple things together to give yourself the highest chance of being a profitable trader. Okay, you can imagine that maybe if you have the Ichimoku cloud by itself, you have a 30% chance of being correct. You add in a trend line, you got a 20% chance of being correct. You add in the Fibonacci, you got maybe a 10% chance of being correct. You add in the stochastic, you got another 10% chance of being correct. By itself, right, is not going to be effective, like a small chance. But you combine it all together, what do you have? You have a 70% chance of being correct. It's only effective if you combine it all together, right? If you just trade it individually, that's often a little bit too weak, right? So that is the trick to a lot of these trading strategies, is combining multiple factors together to give yourself the highest chance of a profitable trade. Okay, now let's show you some live examples. Okay, I'll show you some live examples of the setups that I evaluated, how I broke it down, and why, how you can apply it in your trading. Okay, if you have questions regarding this, or you want me to look at some other charts or some other instruments, you can let me know and I'll take a look at them. All right, now let's look at this setup over here. So if you, this is the link, right? So each of this, oops, how do just give me a second. I think I have, I need to go back to my slideshow again, sorry. Okay, I'm back here again. Sorry about that. Right. I just wanted to show you a link. It seems like when I click the link, I'm not sure where it loads. It doesn't seem to load. But it's okay. Oh, it does load over here, right? So this all of it is timestamp. So this was posted on the 7th of April. Back to another session of using technical analysis to find it. Yeah, this was posted on the 7th of April. So you can see towards the analysis, what we did for the analysis is really simple, right? There was a annotate. Actually, I'm going to just show it to you over here. You can see over here, I'm going to draw, right? There was a trend line, 1 touch, 2 touch, 3 touch, 4 touch, breakout, right? So the trend line broke out. There was a descending trend line that was pushing prices down. There's the Ichimoku cloud over here. So you can see Ichimoku cloud, and price broke this very nice resistance level. Okay, so price on a pullback resistance, it broke a key ascending trend line, which is this one. It has a bearish trend line that is pushing it down, as you can see, a nice little bearish trend line pushing it down, and it's below the Ichimoku. Although it's not as strong, but price is below the Ichimoku. So we concluded that price would drop to the next key level, key support level over here. Okay, what has happened since then? You can see that price dropped perfectly to our target over here. Okay, so this is an example of applying technical analysis to trading, right? Especially playing the trend line breakout, because the moment The moment price breaks out of this trend line, right, it starts to feel very bearish. You throw in the bearish momentum, you throw in the Ichimoku cloud momentum, you have enough momentum to push it down to the next key support, right? So this is one example. I will show you more examples. Let me just show you another example over here, right? So in this example, price broke out of a channel, right? You can see nice little a channel. Requirement for channels is that you must have 4 touches. You got 1 touch over here, 2 touch over here, 3 touch over here, 4 touch over here, right? 1, 2, 3, 4. Price broke a nice overlap resistance turn support, right? So you can see that there was this nice little resistance turn support, right? So price broke out of it and it's coming back down, right? And this was the level where it kind of broke out of the channel too. So you got 2 of it. Price then broke a 23% retracement. You can see a Fibonacci retracement over here, 23. So whenever price breaks a 23% retracement, the next level that it likes to go up to is the 38% retracement. Okay, so we believe that it go up 38% retracement and price cross over the Ichimoku. If I'm not wrong, the Ichimoku was over here when we drew this example. Okay, you can see how 4 things all lining up very, very nicely over here. And what happened, right? You can see we are going to call for this bounce up to here. You can see over here, price bounce up very, very nicely to our overlap over here. All right, so it's a very, very nice setup, very, very high probability setup, right? So each of these, right, this could have been a 30% chance of being correct. This could be 20% chance, right? This could be 20% chance, right? This might be 10% chance, right? So by themselves, they're not good, but you combine them all together, right? You combine them all together and you have maybe 80% chance of being correct on this setup. Okay, I'll show you a couple more examples, right? And remember, guys, if you have any questions at any point in time, just send it to me and I'll be more than glad to answer them. This is another example that we're looking at. So this is a continuation. This was a super duper duper nice setup. Okay, so you notice that there was price is testing a bearish channel resistance. Why is it a channel? 1 touch, 2 touch, 3 touch, 4 touches. Actually, about 5 touches, right? We got 1, 2, 3, 4, 5 touches. Price is testing a pullback resistance, right? 1. This is a pullback resistance over here. What does a pullback resistance mean? You can check out our previous webinar on that. Okay, price is below the Ichimoku cloud. You can see that the cloud holds prices down very nicely, hold price down very nicely, and price is right at the Ichimoku cloud over there. Price is testing a short-term 38% retracement over here. Price is testing a longer-term 23% retracement, starting point here, ending point here. So there are a lot of reasons why this is a very strong level. So we are going to call for prices to drop from this level. Now, what has happened since then? If you scroll down, you can see how price dropped very, very nicely, right? Touch a level and it dropped very, very nicely to our take profit target, right? So you can see, we're calling for the pull drop to the next pullback support. That's exactly what happened. So we played it back to this pullback support over here. That is enough to make money. Okay, that is enough to make money if a good 1:1 risk to reward kind of setup. Okay, this is another example. This is another example we have, right? Notice trend line, 1 touch, 2 touch, 3 touch trend line. Price broke out of this trend line. Okay, price broke out of this trend line and it crossed below the Ichimoku. You can see it crossed below the Ichimoku over here. Very importantly, right? This is why I like this trade is because not only is there a bearish exit. This is an example of price being bearish, but if you look at the bigger trend, right, there's a very, very nice bearish channel that is still loading on so much pressure to continue to push prices down, right, to push prices lower. So you got very, very strong bearish momentum over here, right? You cross below the Ichimoku and you broke an ascending support. So we're looking to play it down to the next big support over here. And very nicely, you can see how price, it broke that level, come down, touch our take profit, right? And, it bag us out now, bag us a nice amount of pips for our profit. Okay. Now guys, so this is the setup, right? I want to I want to create a little bit of a checklist for you guys, right? The checklist is very simple. The first thing is, what happened to trend line? The trend line, did price break out of a trend line? The second thing you need to look out for is the Ichimoku. Okay, did price also break out of the Ichimoku? Third thing you need to look out for is the larger momentum of the market. What do I mean by larger momentum? Right, you have this as the larger momentum as an example, right? Is it in your favor or not in your favor, right? Is it using a channel? So could it be a channel, right? Or could it be a big Ichimoku cloud? Or could it be a big moving average, like maybe the 100 or the 200 moving average? Okay, so once you have those three things, then you must see, did it break a key support level? So support and resistance level, you need to see if it broke a key level, right? Then lastly, you can see whether it broke a nice Fibonacci. If it did, even better, right? It broke a Fibonacci, it should trigger. If it broke the 23, it should go down to the 38. If it broke the 38, it should go down to the 50. If it broke the 50, it should go down to the 61.8, and it goes on and on, right? But you just need to know how to draw Fibonacci correctly to use this effectively, okay? And if you have this thing checked off, checked off, checked off, checked off, checked off, checked off, is a very, very high probability setup. You're going to look at your take profit. For your take profit, look at the chart and play it to the next key level. Why do I play it to this level and not this level over here? It's because this is a big, big level. Price bounce over here, and since what? Since 2017 or 2018, price has not came back down to that level. So it's about 5 years since price came down to that level. It would be foolish of me to just want to play play a move beyond that. You know, this move here is enough for me. Okay, so the tighter you keep your stop loss, you know, the more profits you can make, right? Because of the better risk to reward kind of setup that you have. Okay, guys. Now I do want to show you guys a couple of things. If you have the time, please try to tune in to that. Right, you can head to this site called vip.ironfx.com. I'm going to show you the registration process, okay? Because, because a couple of people are wondering how to register. vip.ironfx.com, if this is a site you want to go to, when you go there, you'll be asked to click this thing, join IronFX server. Okay, if you try to access any of the stuff by the site, I think it's all blurred out, so you can't really see it, right? So you can click join IronFX server, click register. Okay, so we're just gonna come up with a random stuff over here, right? We're gonna come up with a simple username, right, and the password. Now, when you click register, I'm gonna show you the process. You need to agree to the disclaimers, as you can see over here, right? You can disable that. Join server. Now, you notice that when you join, there's nothing here, nothing that you can see. You must click on this thing called request access. When you click on request access, they say, please attach proof of your IronFX live account to get access. Click request to join channel. Please let me in. You can upload your files, right? So maybe we upload the simple picture of ourselves, maybe diamond hands. For those of you guys know what diamond hands is, it's diamond hands. Send in request. Okay, so once you send in the request, right, you can see that your request is pending approval. What happens is that on my side, I can just come in here. I can look at request management and I can see, okay, this guy has requested access, right? What has he attached? Diamond hands, right? This is proof of his live account. I will accept it. I'll give you a nice role. And once I give you the role, right, this is where you can get access to it and you can see all the different channels by the site. And this is a place where you can start asking questions, right? So imagine you're looking at this and you're wondering, okay, euro dollar, do I sell from here? You can say, hey, hey Desmond, do I sell from this level? What level are you referring to? You just need to highlight the text. Click this button called link object to text. Select whatever you just drew. Click confirm and send it through, right? So imagine I come back here, right? I come back here and I see that someone has asked me a question. right? I come back, someone has asked me a question. Hey, do I sell from this level? What level are you referring to? All I need to do is to hover my mouse over it, and you can see it lights up on the chart. So I know, oh, okay, this is the exact level that you were referring to, right? And that is where we can help you become a better trader, right? Because I can just come in here. It's like, okay, awesome. Give you a nice little thumbs up. Come in here, and I say that, yeah, it looks like a nice level, and it also, right? It also seems to line up with the 61.8, right? That's why I can say it also lines up with the 61.8 retracement. Same thing, highlight this text, and I can even select the exact retracement that I'm referring to, send it through. How it looks like is that when you hover your mouse over it, you can see this is the exact tool that I was referring to. Okay, guys? You see, it's a really, really nice, simple way that you can register for the VIP room, right? And it allows me to actually guide you better to be a better trader, right? So anytime you got questions, just send it through. All you need to do is to have a live IronFX account to get access to this. Okay, guys? Now, I do want to show you one example on crude oil on the daily chart, which I think it might be, you guys might be interested in. Was it crude oil? Or it could have been crude oil. Yes, on the daily chart. This could be a nice setup for you guys to look at, okay? This is what I mean by applying what we've learned. We draw a trend line from here until here. So Techno is asking how to have a live IronFX account. Just go to ironfx.com. This link here, copy link address. Register for it over here, and you can get a live IronFX account. Okay. Now, anyway, back to this. Yeah. So please, if you have the chance, please just go get that, get access to the IronFX VIP room, because I believe, I'm not sure when, but they'll be increasing the entry requirements in the future. For now, all you need is an IronFX account, but maybe in the future, you know, you need to put in like a couple, like $10,000 just to get access to it, right? So if it's in a promotional stage now, so go register for an IronFX account if you don't have one, just to get access to this. Okay, once I give you access, no one can take that away from you. So this is an example of applying what we learned today. Trend line, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. 5 touches here. So this is a valid trend line. Okay. Price has since broke out from the trend line. So we're expecting it to maybe drop down. Okay. So what do we do once we have identified this? We throw on the Ichimoku cloud, and we notice that price is crossing below the Ichimoku cloud. If it drops here, right, it will actually cross below the Ichimoku, which is a very nice thing. Okay. What is the support level that it needs to break? I am a little bit wary about this support level, right? We can see that price bounced off very nicely from there previously and is right there again. So we need price to break this level to trigger the move down. I believe that the next big level that it would probably drop down to is over here, right? This could be the next key level that it might drop down to. Okay, but first and foremost, it needs to break this key level, you know, trigger the move down. All right, so yeah, these are some things that you can take note of, right? That it's when you're doing analysis, it's very easy to find trend lines. You find a trend line, you throw up the Ichimoku cloud, you throw up the support and the resistance levels. See, this is what I call a downside confirmation, meaning that we need to wait for price to break this level before prices go down. Okay, it's a setup which I am also watching on myself. All right, yeah. So I hope that this webinar gave you a good idea on how to apply trend lines, you know, how to apply channels, right? Along with all different live examples, you know, how you can apply it better to your trading. Creating a nice little checkbox system. You got trend lines, you got Ichimoku, you look at larger momentum, right? You look at which is made up by the channels, the Ichimoku, the moving average, right? You can look at support and resistance as a key trigger. Look at Fibonacci too, which we'll be covering in the future webinars, right? And if you combine all of it together, right, that's where you can become a better, that's where you can decide whether it's a nice enough setup